Welcome to the Finovate webinar. I'm David Penn, Research Analyst for Finovate, and I'm joined by Bob Meara, Senior Analyst at Celent, and Andrew Stevens, who's the Product Marketing Manager at Quadient. Welcome, everyone. We'll also be live tweeting this webinar, so you can join in the conversation using the hashtag FinovateWebinar. The way consumers shop, buy, and use financial services is changing, along with ever-increasing expectations. Despite shopping online, many customers still buy financial products in the branch. During this webinar, we invite you to learn why an inviting onboarding process for customers is no longer optional. We'll start off with Bob Meara, Senior Analyst at Celent, discussing why omni-channel onboarding is needed, where many onboarding processes fall short, and what's a bank to do, 4 recommended steps to achieving omni-channel delivery. We'll then move on to focus on financial institutions with Andrew Stevens, who again is the Product Marketing Manager at Quadient. He'll discuss the importance of putting the customer at the center of your onboarding journeys in face-to-face environments and how this method will delight your customers. Now, before I hand off to each of our guests, I'd like to remind you that we will be holding an interactive Q&A after the presentation. So if you have any questions during the presentation, you can send them to us using the Ask a Question button at the bottom of the screen. And with that, Bob, over to you.
Thank you very much, David, and good morning, good afternoon, everyone. It's my pleasure to join you today. So I'll enjoy the first handful of moments with you today and present my perspective from primarily, but not exclusively, North American quantitative research among financial institutions on the topic of omni-channel customer acquisition. And hopefully, if I do a good job, then Andrew's commentary following mine will make perfect sense. For those of you not familiar with Celent, we're one of a handful of industry research and advisory firms. What makes us somewhat unique is that we focus squarely on financial services. We have practice areas in banking, insurance, capital markets, and wealth management. I'm in the banking practice. As David mentioned, I wanted to spend just a moment taking a look at from whence we've come, right? A short history of retail delivery prior to our current state, leading to a discussion of why omni-channel customer onboarding is so important, and then thirdly, kind of what's a bank to do. Emphasis on the second part will be the omni-channel component of onboarding, because arguably I think we'd all agree that customer onboarding is fairly primary to growing revenue. And thirdly, a confession along the way. I interchange the use of onboarding and customer acquisition in this presentation, and strictly speaking, I think we can all agree they're not identical. They're not synonyms. Customer acquisition is a component of onboarding. Onboarding is a bit more evolved. Now, before I get going, though, a question for you all. My question is, should the captain of the Costa Concordia have been concerned about the average depth of the Tyrrhenian Sea? Surely you all are aware of the tragic tragedy off of the coast of Greece some years ago. And I can imagine what you're thinking. First of all, Bob, why are you asking such an irrelevant question at the start of a banking presentation? That would be a fair sentiment. Or you might be thinking, why are you asking us questions? We're supposed to be asking you questions. And that would be fair sentiment also. Here's why I bring this up. Arguably, that tragedy could have been averted not by unawareness or better awareness of ocean depth, but by better situational awareness. So human factors maybe caused that tragedy. And I'm not offering this up to metaphorically say you're all doomed and your banks are going to be shipwrecked if you don't buy a solution that we sell before nightfall. But what I'm saying is, arguably, that captain any ship captain needs to be uniquely and precisely understanding the keel depth underneath the ship and along the planned route, of course. And of course, the average depth of the ocean probably is irrelevant, isn't it, right? If they're not heading everywhere, then the depth everywhere is not important, unless it's changing. And if it's changing and one's charts are not up to date, then it could be hugely relevant. And what I'm going to try and communicate here is in the context of customer acquisition, things are changing massively. They're changing quickly, and they're changing globally. And so the average depth of the ocean, if you will, is changing fairly massively. And I say this because often as an analyst, I'm accused of kind of making average depth of the ocean comments, right? The industry this, the market's that. And banks will often say, to refute my points, is say, Bob, that's all great, but in the Netherlands, we're very different than North America, or within North America, Peoria is very different than Philadelphia, or even East Philadelphia is very different than South Philly, right? And often those comments are meant to say, well, if you knew my customers are different than the average that you've been talking about. But my message to you is, at various rates and extents, the whole world is marching in the same direction. So that said, let's look at from whence we've come. Now, none of us is this old, but previous to 1960, we know this historically, right? Retail banking was 100% branch banking. That's all there was. It's hard to believe that there was life before call centers, but apparently that was the case. Call centers came in the 1960s and have evolved somewhat. Since then, the advent of the IVR, I think no one's happy with that, but it is what it is. But today, even video and text and social media and a variety of other digital mechanisms are a part and parcel of call centers. The ATM came quite a bit later, right? And we've celebrated the 50-year anniversary of the ATM channel. And it, too, has had its fairly independently evolving course of things. Cash recycling was introduced fairly broadly in the 80s. Deposit automation has been a major benefit to the ATM channel. And more recently, personal teller machines, listed there as PTMs, called by a variety of other topics, but basically offering the ability to engage a teller by way of real-time video. So the call center and the ATM channels are interdependent in some ways at some institutions now. Online banking came much later, and then on the heels of that, right, mobile banking, and we all know this, right? But along the way, what was once very clear, right? We grew separately acquired channel platforms. They were separately managed with separate organizations. We had distinct purposes and metrics, well-defined ones for each, right? Anyone who's been in charge of one of these channels has very, very clear KPIs. And along the way, we've had a very precise, albeit under a siloed understanding of customer utilization. And customer utilization metrics are still widely looked at on a channel-by-channel basis. But all this is blurring in a number of ways. Objectives of channel by channel are blurring, right? They're changing. Customer utilization, as we begin to understand what customers are really doing across channels, not just within each channel, then the whole idea of our legacy thinking about how customers interact with their banks is blurring, and organizations are blurring equally, right? There's all manner of organizational change going on as banks seek to better leverage this growing multiplicity of so-called channels to deliver a good and compelling customer engagement. And in the context of customer acquisition, I think it'd be fair to say it hasn't kept pace with the evolution of retail delivery. Systems used in branches are typically, not universally, I don't mean to insult your bank if you've evolved past this, but in a large number of financial institutions, branch-based systems are still based on their legacy sales platform. They're based on highly paper-centric workflows. In the Internet channel, some acquisition capabilities are obvious from bank to bank, not necessarily particularly compelling ones, but at least the capability is there. In many cases, they are independent, however, of the branch systems, right? So activity taking place on one, until the activity is finished, it has no visibility elsewhere in the bank. And then in the mobile and ATM channels, if offered at all, and by comparison, few banks have that capability. If it's offered at all, it's rarely optimized for the device. Said another way, it could be a fairly poor customer experience, leading to poor results. And so I think we could all argue or agree that customer acquisition is a very fundamental, very key component of delivering retail financial services in an omni-channel fashion. But the rub is, while banks increasingly desire to be less reliant on the branch for customer acquisition, they've barely moved, collectively, have barely moved the needle toward digital. This data looking at channel mix for account opening on the left and non-mortgage loan applications on the right show awfully similar results, and this is from a North American survey of banks and credit unions in the spring of 2016, so just a little over a year ago. And to the best of my knowledge, the needle hasn't moved all that dramatically in those intervening months. In fact, just today, Bank of America, some of you may have noticed, announced improvements to its mobile banking service, and in the press release cited the idea that 25% of new customers come from the digital channels, so modestly up from industry average 1.5 years ago. And Bank of America is well known for not only investments in digital, but massive promotion of digital capabilities. So my guess is they are probably, in the United States anyway, industry leading. And interesting, from our research, well under half, just 40% of surveyed banks have specific measures in place or goals for increasing digital onboarding. They have the aspiration, but don't have measurable goals. Among those that do, just 1 in 10 are exceeding those goals, specifically sales production goals. More than 2/3 are below their stated goals, even in the desktop or online channel after 2 decades of having those capabilities in place. So maybe, just maybe, it's time for action. We find that most, gratifyingly, most banks and credit unions track digital application completion rates, but sadly most don't have a holistic plan. So they may track them, but just about 50% of surveyed banks systematically follow up on incomplete applications to assist if possible, right? In other words, these could be viewed as largely qualified sales leads, but banks don't treat them as such. And indeed, a number of banks don't have viable capability to do that in scale. Even fewer of customers subsequent complete an application that they might abandon digitally in the contact center or branch. Only 1 in 5 surveyed banks can even connect the dots, and fewer still attribute sales to multiple channels when this occurs. If a customer begins an application in one channel and finishes in another, they must start over at 2/3 of banks that we've surveyed over the last year. So a startlingly bad experience in an environment where customers are increasingly expecting a fluid engagement, not only with financial institutions, but with everyone with whom they do business. And here's why that's so important, right? The traditional banking industry is very different than the rapidly changing information businesses, the global brands and the right we all recognize, right? And we could argue that there are clear differences for that, massive differences, for example, in the extent to which industries are regulated and all that stuff. But the fact of the matter is, our customers are increasingly influenced by the brands on the right. The brands on the right, who are comparatively unencumbered by the regulatory constraints banks must undergo, are the ones setting expectations for customer experience. And so those expectations are placed on banks as well. And customers are both unaware of, probably, and uncaring about the regulatory constraints that might impact our slowness to change. So back toward the average depth of the ocean comment I made earlier. This chart on the left looks, and this is an ancient history view back in 2011. It looks across multiple markets globally and plots the mass market internet access percentage on the x-axis against online banking utilization on the y-axis, and you can see very tight clusters across markets. The U.S. in this case was pretty much right in the middle, with the Nordic regions and Canada much more self-first or digitally driven at that time. But let's look at that, some of that same data, the same portrayal of information in 2015 in the U.S. has moved massively from the middle of the chart toward the upper right, and that happened in just a few years' time. And so these changes are happening globally, and they're happening rapidly. And they're happening across the shop, buy, use customer journey. I want to look quickly and separately at the shop versus the buy versus the use scenarios. In some cases, they are concurrent in customers' journey. In some cases, they happen in different places, and sometimes they're interchanged, right? But it's interesting that if we look at historically brick and mortar retailers of all sorts, as well as retail banks, branches were designed for shopping, buying, and using, right? Procedures, capabilities. Training for frontline staff were all geared to make sure customers' experience was quite good and effective across all three elements of that continuum. But if you ask the question of brick and mortar retailers, why any of them throughout the globe invested in a digital presence, I think without exception they would all say to support the shop, buy, used experience broadly in the digital realm also. But until recently, there probably hasn't been a bank on the planet who looked at it that way. Instead, they looked heavily at the use part. Internet banking and mobile banking platforms have been designed for transactional efficiency from the get-go. Maybe public-facing internet banking platforms were designed around the shop use case, but most until recently didn't have buy capabilities implemented there, and if they were, they weren't done as well as they could be. And so doing all of this, being competitive across all three aspects of this, and doing so amidst rapid change is really challenging. Looking at the shop part, this data is from a fairly dated 2014 path to purchase study. So we looked at a little over 1,000 U.S. customers to try to understand how they made their primary banking relationship decisions. And so they were most influenced by more than a factor of 2 to 1 by digital realms than they were by anything based on in-person interactions. In other words, the digital realm was twice as important in customers choosing their banks than walking into and visiting a bank branch. That was in 2014. Those numbers are likely more stark now. But interestingly, we looked separately at those who researched online, right, those who made purchase decisions digitally versus those who did not. And then we asked them, okay, how then did you subsequently buy? How did you then open your checking account? And you can see that even among those who shopped digitally, 2/3 still opened in the branch. And this is 2 years ago. So why, Portel? Why didn't you open on the account online? The reasons varied. Most substantially, most felt more comfortable talking to a person. Some had questions, some just said it was habit, some said they thought it would be easier. That's hard to believe. But what strikes me is, and I'm seeing now that the legend didn't come across quite as good in the translation to the online platform, but I didn't mean to go line by line rigorously here. My point in this last bit is just to suggest that customers are going to do what they're going to do, but banks have had own much of this outcome. In other words, we haven't made it easy. If customers have questions in the digital onboarding process, we haven't made it easy for them to get their questions answered in real time while still being digital. If they had a question and they wanted to speak to someone, many banks don't provide that real-time chat or video capability, and so they're forced to go into a branch or pick up a phone in a call center if they want to visit a branch. And that's fine that they do, right? We haven't made it particularly easy to schedule an appointment, for example. So as customer acquisition is becoming more omni-channel in customers, in the view of the customer journey, what does that mean for our customer acquisition capabilities? We think first and foremost it needs to be inviting for customers. The customer experience needs to be good because poor customer experience translates to lost sales. It needs to be as simple and as intuitive as possible, and it needs to be fast because those experiences win. It needs to be omni-channel. Banks think in terms of channels. I think we all have, and our terminology still reflects that, but customers both don't and never have. But in that context, we think branches will continue to play an important role, more so in some markets than others, and for a longer period of time than others, but certainly they are central to the customer acquisition mix in most markets at the moment. Thirdly, we think these experiences need to be designed mobile first. Mobile is rapidly growing, and so now is the time to get equipped if you're not there. Anyone who looks even casually at the headlines around shopping over the Christmas holiday season knows that mobile shopping is growing massively over online, and to some extent, in a measurable way, to the extent of to the expense of brick and mortar. And then obviously, everything needs to be compliant. And what we hear from banks consistently is, yeah, all that's true, but while managing legacy system constraints, because I haven't met too many banks who are eager to rip and replace legacy systems in order to achieve these four outcomes. So if that's the case, what's a bank to do? And I'm going to pick up my pace here very quickly and hand it off to Andrew. We find many financial institutions, large and small, are in a roughly similar position, and they've got a relatively common wish list. Most run disparate channel platforms today that aren't going away anytime soon. Banks may have aspirations for more of an omni-channel customer experience layer, but most don't have that deployed right now. Most still operate inflexible and paper-based legacy demand deposit and loan management systems. And oh, by the way, those were all designed for employee use, weren't they? They weren't designed for customers. And so a lot of banks who put rudimentary capabilities on the digital side still had workflow, but that was very much bank-centric. In other words, it didn't make any sense to customers, and particularly customers who might opt out of the process, right? Banks were left with precious little or very incomplete information for which to follow up if they had any follow-up capability at all. Banks are hugely over-reliant on the branch for sales. And often, prospects that drop out of existing digital acquisition systems are invisible to the bank. They might be able to count occasions of that occurring, but the customers themselves, who are they? Where do they come from? How have they interacted with my bank historically? Many banks are sadly unaware of that because their current systems don't provide that view. And if they have any mobile acquisition capability, it's fairly poor. And so that leads to a fairly common wish list, right? A clean, low-friction, device-agnostic user experience, right? Of course, that's what everyone's looking for. Compatibility with existing legacy systems, right? Because rip and replace, although that might be in the card someday, it's not in the card short term. And what we find from bank is their wish list is fairly urgent, right? I need this and I need this quickly. So don't give me a 3 to 5 year game plan for this. I need this up and fast. And so you have the fast and inexpensive implementation, and of course, it needs to be compliant. One way to address that is by looking at the process steps along the customer acquisition process. We do so here, and we invite a number of questions on the bottom half of the slide. Questions that all kind of address various components of simple, seamless, and painless, right? For example, do you ask gating questions early in your process, right? Asking a zip code very early in the process would, for example, allow customers who are outside of your footprint to be politely offered an alternative rather than waiting until they've invested 5 or 10 minutes with you. Are you able to give a definitive or provisional approval quick in the process? So there are a variety of ways where banks could look at these process steps and kind of do your own self-assessment. My point is just in this slide is not to go through these rigorously because we don't have time and it would be fairly tedious, but rather just to offer these up for your own consideration, because modern customer acquisition platforms offer very good answers to many of these process steps. And I'll go through a couple. But sadly, for too many would-be customers, friction occurs early and often, right? Things are just too complex. Product choices aren't intuitive. Now, in some cases, because products were conceived by banks in the day when self-service selling wasn't a factor, right? Because bankers were always taking customers through product choices. Those days are gone. There were too many steps in what should be an easy process, and the approach to get questions answered for most banks is burdensome, right? You shouldn't have to pick up the phone, authenticate again, and start all over, for example. Things are too involved. KBA questions that knowledge-based authentication questions that customers can't answer. You've probably all experienced that personally. Your processes might involve a branch visit, not because customers prefer it, but because that's the only option you've given them. And that happens, I know, from a regulatory perspective in some markets, but that is not the only place we see that. And processes might not be automated, so the darn things just take way too long, and customers don't have the patience for that. And so we see, and I won't go through this rigorously, but I understand you all have the slide decks when we're finished today, that modern approaches to this from a technology standpoint offer a variety of capabilities that seek to provide the best and most seamless customer experience throughout the process, while having save and resume capability, for example, responsive design to be agnostic and appropriate across devices, and can offer a variety of engagement options such as click to call, click to text, video, or appointment booking all along the way. And most of these approaches do so without ripping and replacing existing systems. In fact, the back office systems are left in place without the need for back office system process redesign, but the information presentment and order of things can be tailored appropriate for the end user experience and ported across end user channels using a customer experience layer between the channels and back office systems. Many things are cloud-based. They can be acquired fairly inexpensively, tens of thousands of dollars, right? Not hundreds or millions, and can be erected very, very quickly because most all are cloud-based or at least have that option. We find banks using these systems, but more importantly, banks reorchestrating their customer experience using this technology do a small number of things quite well and quite smartly. First, they design the process from the applicant's perspective, not the bank's, right? And that sounds obvious. Of course, we'd all do that, but and Andrew, I know we'll talk about this later, instinctively we tend to think in our terms, not customers, and so it takes some vigilance to continually think through the lens of the customer. Banks that do this well also consider capabilities offered by the digital medium rather than simply translating a paper and branch-based process to the digital realm, right? The digital capabilities, particularly mobile, offers a variety of new capabilities that can not only improve the customer experience but can take cost out of the process for banks. And you can't get there without fully reassessing capabilities. And thirdly, there's a fair amount of self-censorship that goes on, right? Wet signatures, for example, a perpetuation of those, right, rather than avoiding the self-censorship and refining processes where they don't make sense. And so our handful of recommendations to banks into or soon to be pursuing this journey. First of all, we don't think being hasty is a good idea, but now is the time to get busy. Mobile is rapidly growing, so now's the time to get equipped. If you are a bank who is in the position to say, well, this is good, Bob, but my customers aren't there yet, we think a short while from now they most certainly will be. Mistakes making now, and we all will make them, because these are test and learn kinds of things. As we make mistakes and make them relatively early, then they are comparatively inconsequential to what they would be if you delayed action. So do get busy. And secondly, start small, right? Get it right before maximizing the visibility of this. And there's a variety of ways to do this. The most obvious way is to start with one channel and start with one product, like a DDA, before you open it up across products and lines of business and go enterprise-wide. But start with a simple product and a single line of business with a single channel, and you'll be surprised at how quickly you can migrate from there. And you'll get very, very rich information and good, tangible street smarts in the process, and you'll be surprised at how quickly that happens. And then test and learn. Experiment is going to be required. And we invite you to systematically evaluate customer interactions because doing so can uncover very obvious areas for improvement. We've seen example after example of banks who, plug successful holes in the dike, if you will, and just see sales attribution rates in the digital realm just march steadily upwards as they improve the process that customers go through. And oh, by the way, listening to vendor suggestions is a great, particularly vendors of customer acquisition capability, right? They do that for a living. They've been there, done that with lots of banks. And so my experience is, I'm fairly a cynic when it comes to vendors, truth be told. But in this case, among others, I think they really have a wealth of experience to offer. So I'd encourage you to listen to them as well. And then once you've got through testing and learning, once you've got a fairly good game plan in place, then certainly fully leverage that across products and lines of business. So thank you very much. There's my contact information should you choose to reach out, and we'd be happy for that outcome if you would like. Andrew, on to you.
Thanks, Bob, and good morning, good afternoon, or good evening, everyone. It's great to be here and see everyone on this call. Just before I go into my side of things, at the end of this, I'm going to pass back control to our host, David, and he's going to lead us through any questions that you may have. Now, there is a question button on the screen, so please feel free to throw anything at us on these topics that you want, and Bob and I will do whatever we can to make sure we answer those at the end of this. So my half of things. And after all that fascinating talk about omnichannel and digital, I'd like to talk to you a little more about just why revamping everything you do at onboarding in a face-to-face branch environment is absolutely critical. Not just for your net promoter scores, but even though they are important, but for your bottom line financials as well. Because as Bob has said, while we all want to move to a more digitally, functionally rich world, we're nowhere near it yet, and we still fall back on those face-to-face interactions. I think Bob's slide had 85% of account opening interactions taking place in branches. So what's wrong with what we've got today, and how can we fix that? Well, to understand that, let's look back at the email that you received and the exact wording of the bit that I'm covering. Andrew Stevens will discuss the importance of putting the customer at the center of your onboarding journeys in face-to-face environments and how this method will delight your customers. There's two uses of the word customer there. But which customer are we really talking about? And when is the customer not the customer? Clear as mud? Well, listen on, I'll try and explain. And I'll do that by giving you a personal example of account opening that shows that the customer may not be who you think, because making sure that the customer is the customer requires a lot of bravery at times. So my personal example starts a few years ago. I met a girl, very pretty, frighteningly clever, an economics student at the university in my hometown. Things progressed well, and we decided we should open some joint accounts to start saving for the future. That's a typical British romance. Boy meets girl, girl falls for boy. Boy suggests that they should be fiscally responsible and open long-term savings account instead of just enjoying new love. Now, while things were going nicely, I didn't want to take any chances. So I made sure that we opened the accounts at my bank, an internationally respected large financial institution. We had an appointment. We arrived at lunchtime. A checking and a savings account for her, and a joint checking and joint saving account for us both. That's all we wanted. 2 customers, 1 simple use case that needed repeating 4 times. It took 2.5 hours. She nearly walked out on 2 occasions, bored with the process and the sheer amount of dull duplication involved. And to this day, I get an involuntary twitch every time I hear someone say, "I'll just have to photocopy that for you." Well, we finally got everything sorted anyway, and there's good news and bad news out of that story. But more on that later. First, let's look at why the journey was so bad and why it was so important. So back to that marketing pitch. Firstly, we need to look at who the customer was in this case and which demographic they fitted into. I don't count because I already work for the company, so we can ignore me for the purposes of the next few minutes. The clever blonde girl, though, she's an early-ish millennial. And what do we know about millennials? Well, there's been a lot written about them, and I was actually looking through the BBC website this morning, and there's an article about them there. I quote, "They change jobs too frequently, they put off marriage, they are busy spending all their money on avocado toast instead of deposits for housing or long-term savings." Now, the article goes on to say that that's very unfair, and I tend to agree. There are 3 very important things that are relevant about millennials that hadn't been taken into account on our journey. Number 1, they don't accept what may have been accepted in the past, and they are very willing to share their experiences very publicly because they care as much about the experience as they do about the result. You'll never see someone posting on Facebook that they opened an account, but they'll tell you all about what happened while they were opening it. Second one, while they maybe the most digitally active group, they also like branches. Many people assume that the millennial wants everything digital. But in fact, they're the people that uses Bob's omni-channel concept the most because they're comfortable with every form of communication, not just any particular one of them. And thirdly, they're about to be stinking rich. There's an estimated $30 trillion in baby boomers funds that's ready to be transferred to millennials over the next few years in the US alone. So you ignore them at the peril of the future stability of your bottom line. You may be a very profitable organization right now, but the money that you have in your organization may be moving elsewhere if you don't get this sector correct. So on with that information, where was the issue? Well, the first big problem was the process. The background systems behind account opening were, should we say, slightly older than they should have been, just like in many financial institutions, and they were awkward to amend and expensive to play around with too. But they could be amended. It was advised, though, that it would just be easier to work a process around how they already allow data to flow. In effect, they compromised for cost and simplicity to avoid having a very difficult conversation with someone senior in IT. And at that meeting, where that first probably minor decision to allow a tiny compromise was made, the customer stopped being the customer. The customer became the IT developers, and the floodgates silently started to open. Once that precedent had been set, and the IT development team was sat in the customer chair, everything started to revolve around them. And the process ended up being so IT-focused that it looked stupid from a real customer experience perspective. Simple questions like, if this is an existing customer and I already hold a copy of his passport, do I need to take it again? Or, if I decided that I did need to take it again and I took it 25 minutes ago for the previous account that I opened for him, do I need it again 25 minutes later for the joint account? These questions were never considered because the customer had silently become someone else. The second big problem became clear when I heard the assistant reading their script and uttering words that I never ever want to hear in a banking environment again. And those words were, "Now I just need to read you the terms and conditions." Such an innocent line in an operator script, really easy to put in there. Just one little line, but masking unknown horrors for both the operator and the customer, because no attempt had been made to personalize the bits that they needed to read to us. They were just generic and very long as a result. I actually went back a few years later and did a little bit of research, and the longest set of terms and conditions that they had there was 13,000 words longer than Shakespeare's Romeo and Juliet. Can you imagine sitting and listening for that long to terms and conditions? Not a great customer experience. Why were they generic? Well, because the customer wasn't the customer again. In this case, The risk officer had bullied his or her way into the customer chair using the threat of compliance. And they decided that the best way of ensuring that all of the risks were covered was just to read out the whole set of terms and conditions for the product instead of going through the key ones that were personal to us. They could have built something more complicated and time-consuming that worked perfectly, but they wanted to go a bit faster. So they compromised again, because no one likes to argue with compliance, even when they're wrong. So they compromised for risk and for speed to market purposes. Now, I would doubt that there's any bank or any other financial institution in the world that proudly states that they put the IT developer at the center of everything that they do, or that they have adopted a brand new confusion-based experience model. But by allowing their vision of a great customer experience to be compromised for simplicity, for speed of delivery, for risk appetite, or for cost, and ultimately because they weren't willing to have difficult conversations about what the process should look like in a perfect world, they lost sight of who the customer really was. And let's face it, IT and compliance are just examples here. I have no doubt that if we were to open up this conversation to everyone on the call, we'd be able to come up with a list as long as my arm on the number of stakeholders in projects that people have found that wanted to sit in that customer chair and be the person controlling what was happening. And it's really easy to let them, because nobody likes to have a difficult conversation, because they're risky. To your own career, potentially, but also to the underlying solution. As bankers, we're naturally risk-averse, and deliberately going up against people and saying, no, we're going to make it perfect for the customer, it can be really scary. But if you don't have those conversations and you lose sight of the customer just once, it becomes much, much easier to justify to yourselves and to everyone else why your compromise process is really good and that everyone will love it, only to be let down by the reality of net promoter scores, of lost opportunities once you've gone into production, and some very, very angry executives who want to know why you've wasted their money. And then you're into a difficult conversation that you can't get out of. Now, it's never a conscious choice to switch who you're focusing on. And you'll rarely notice the moment that you give up on your vision. So how do you stop that from happening? Well, first of all, it starts with having the vision in the first place, then making a conscious decision not to compromise, ever. If needs be, you appoint someone whose responsibility is solely to hold on to that customer vision, and you give them veto power on design decisions that are going to go away from that. It's not something that will happen without you thinking about it. Once you've got that, well, one simple customer journey map would have flashed up all the problems that I've mentioned in blazing red letters within minutes of starting the exercise. And it would have been useful to allow the team to gauge the impact of any compromises when the risk officer or any of those other agents of compromise arrived. The customer journey map shouldn't be something that you do at the start of a project. It should be a living document that remains relevant throughout. And if you do it right, you can use it as a really powerful weapon to keep that customer experience front and center of everybody's minds. And the ability to retrieve data from the legacy systems and then build relevant processes around that data. It would have removed all those limitations that the IT team wants to place on the process. Even better, if you can then take those processes and you can port them onto your omni-channel platform that Bob's been mentioning straight after you've proved that they work. And finally, having the ability to communicate with the customer in the manner that they wanted and that was relevant to them as human beings within a specific customer segment would have been a huge help. Whether that was as simple as cutting down the terms and conditions to just the points that were relevant to the product that was being opened, or perhaps something more advanced like understanding the tone of voice that we liked to have used in our communications, and then updating the script to match that tone of voice. That level of personalization would have been very much welcomed, both by us and by the increasingly desperate employee that was trying to help us. So let's quickly look at what the impact would have been if all of those things had been in place. If the bank had streamlined everything to be focused around the customer and minimized their effort and time. And I'll leave these points on screen as we go through it for people just to mull over. So let's start with the initial expectation. Well, We know that customers expect lots of paperwork and awkward regulatory bits. You can't even open an account with iTunes without jumping through a few hoops. And customers generally accept that banking is harder than that. So they're not expecting something fantastic. They've heard the horror stories like the one I've just told you. So they're braced for the worst. What an opportunity then for a great first impression if you can deliver something that is painless and actually pleasant. And take that further, if you can get that account opening time down through a streamlined process to, let's say, 15 minutes for the customer due diligence part, and then 3 minutes for just opening the basic accounts, you've delighted that customer because they were expecting a really poor experience and they've got something so much better. And most importantly, they're not sat on the train home having completed a digital journey and they've got more time to watch funny cat videos on YouTube. No, they're sat right in front of you. They're smiling, and they've got a load of spare time that they weren't expecting. 2 hours of spare time in the example that I gave you. You now own that time. What better an opportunity to cross-sell or upsell? Or how about getting them signed up for internet and mobile banking right away with a really nice personal service, showing them how everything works so they're comfortable using it within just a few minutes of opening their accounts. The Development Bank of Singapore announced a few weeks ago that digital customers are 42% more profitable than traditional clients. So let's get them using your lovely low-cost, customer-centric digital platforms straight away, reduce their costs, increase their profitability, and actually use the time of that customer service agent in a really profitable way rather than filling in forms. That would have been a far more valuable way to use their time. And it would have generated a customer experience worthy of telling our friends about. Or to put it in the Millennials way, I'll click like on that. And just as importantly, so would your CEO. Because remember, all those times that people were trying to compromise the journey, it was likely that they were just trying to please the CEO, whether that was by making things go quicker, covering every base on the risks front completely, or just keeping things cheap. But if the price of all of that is the customers don't like it and you lose customers, or at a minimum, you lose the opportunity to get new customers, your CEO is going to like it and you a lot less. Now, if all of that sounds a little bit complicated, or if you've known it for a while but you've always struggled to execute, or perhaps you've spent the last few months being told the opposite, that everything you do has to be digital and mobile, good news for you, because at Quadient, we care passionately about these things. So passionately, in fact, that we've spent years perfecting our software to help you in a myriad of different ways in this area. We've got an award-winning product suite. It's on screen for you now. And if you're interested in knowing more, please take a look at our website at www.quadient.com, or give us a call and we'll be happy to help you to make sure that you've got the tools to put the customer at the heart of everything that you do, and most importantly, to keep them there. So just to finish, I promised you good and bad news on that story of me and the pretty blonde girl. Well, the good news is that I repaired the damage. Pretty quickly, I apologized. I put her through for putting through all that pain. I bought her some nice flowers. And I repaired that damage so well that we're now married. And we've got 2 wonderful children together. The bad news, though, is that the bank wasn't so successful because they didn't get a second chance. My wife's no longer an economics student. She's a fully qualified chartered accountant. She's the financial controller of a national company over in the United Kingdom. She's got a very good income and an enormous potential income for the future. She's just the sort of customer that every bank wants. And even better, all those questions that the bank asked around customer due diligence and know your customer, it revealed to them that her parents are independently wealthy, retired people living in an offshore centre just outside the UK. So she stands to inherit plenty of money in years to come, that traditional millennial. But her wealth management affairs aren't going to be covered by that international institution that opened those original accounts, despite them giving exemplary service every single day since those accounts were opened. An opportunity missed. And all because the bank wasn't brave enough to put the customer first. With that, I'll say thank you for listening to me, and I'll pass back to David for any questions.
Thank you very much, Andrew, and to you, Bob. Some excellent insights, and perhaps more than that, some inspiration to action, which is certainly something I think that came through loud and clear in both Bob and Andrew's presentations. We've got a little bit of time for questions, and we've got quite a few questions, so I'd like to go ahead and move to them at this time. I want to move to one in particular because I think it might, to start off with, because I think it also might be a point of clarification, and I just want to make sure we've got that cleared away. And this, I think, is directed toward Bob specifically with one of the slides. And the question is, on the slide with traditional banking industry versus information businesses, how are these companies put in a position where regulations are lower than the traditional banks? And perhaps maybe that was directed toward you, Bob?
Yeah, great question, I suppose, and a question addressed to a person who does not assert to be an expert in compliance. So honestly, I don't know, but it's fair to say, right, what medicine and banking are two of the among most heavily regulated industries globally, right? Certainly more so than social media or internet search. Vodafone is in telecom, right? So there's some examples of highly regulated brands over there too, but my point was simply that not to make a big deal, maybe overly so, on the regulatory constraints banks face, as much as just the notion that historically banks kind of would pay close attention to peer group institutions in terms of competitive benchmarks. But these days, it's more important to cast the net very, very broadly and look outside of banking for cues to where customer expectations are headed.
Excellent. Here's another question I think reflects at least a sentiment or two that's come through, and I'll just go ahead and read the question directly. We're skeptical about the importance you're placing on omni-channel. We continue to value customer interactions in the branch channel and think our customers do too. How would you respond?
Both of us could probably address that, yeah?
Yeah.
I would. I'll start, I guess. I would say, well, awesome. I encounter banks all the time who are referring to Andrew's use of the term passionate, right? Passionate about customer service, member service, and pay close attention to that in the branch. I would say, awesome. Then maybe start in the branch, but build something that is omni-channel, so that as you begin in the branch, you can migrate to the digital channels in short order. Because our bet is that you will find you have an evolved perspective, and maybe this time next year you will be offering a bit of a different perspective. And so if you act quickly, you'll have the capabilities you need when the time comes.
Yeah,
Andrew,
I would absolutely agree with that. Yeah, your people in your branches are your biggest evangelists for your product. So absolutely focus on them. But at the same time, if you focus purely on them, then you're missing out on groups of people that want a different way of interacting with that organization and opening accounts there. So offer people the choice rather than just assuming that they only want one particular thing.
Yeah. If I could just chime in on one other thing too, and I think both of us maybe to some extent we're guilty of this also. Often we all hear characterizations of customers kind of in a binary fashion, right? Millennials this, mobile customers that, right? And none of us serve a homogeneous market, right? Most banking client bases are highly diverse, and so it's improper to refer to them as monoliths, right? There's vast differences among them, and so as institutions who cover a diverse customer base, it's important to have those diverse expectations in mind and plan for them.
To take a look at another question, there were a couple of questions I think that you just answered in terms of how to get started. The idea of being a little overwhelmed at the prospect of getting started, and I think Bob, in your presentation, specifically mentioned the idea of the branch as one place for a lot of FAs to start. Here's another question, and again, I'll read it directly. I'm all for improving the CX customer experience, but we need a solid business case to invest. You haven't said much in that regard. And again, I'll leave that to both Bob and Andrew for that one.
Bob, do you want to start on that one?
Yeah, sure. I think fair statement. This wasn't a business case focused argument, I suppose. But for starters, what we hear banks saying is, look, we don't have a visibility into the customer journey, right? So we don't know, for example, abandonment rates. We don't know about cross-channel completions, right? We don't know how to properly attribute sales when multiple channels were involved. And so that inability, based on legacy systems, kind of inhibits your ability to articulate a business case, kind of for starters. But that said, I think it'd be fair to say there's kind of three buckets or three elements to a common business case for omnichannel onboarding. One is, depending on your current capabilities, you're likely to see potentially dramatic reductions in cycle times and operational costs, right? So, and that will take place across multiple channels, particularly in the branch. You're likely to see tangible improvements in sales results, and we've seen that over and over again in case studies of banks who implement these kinds of process changes. And thirdly, significant growth in customer acquisition that you can attribute to the digital channels, and that seems to be on most everyone's to-do list. Any other thoughts, Andrew?
I absolutely agree. And for me, the common misnomer is that customer experience costs money. And I think that's only true in half of the cases. Bad customer experience costs money. Good customer experience is a pure, simple investment that will make you the money back straight away. And the reason that people generally aren't seeing that is because they aren't tracking that data on who they're losing through poor customer experience. How many dropouts you're getting, whether that's on your digital or in your branch environment. How many people who are in the branch would have opened a savings account with you but didn't have time because they had to rush off because the checking account took so long to open. For me, you analyze that information and all of a sudden the good customer experience sells its own business case.
Excellent. Very, very interesting. I want to touch on a question here that sort of circles back around, having encouraged folks to consider the branch as an initial way to get started. We had one person who asked, how do we get enough focus to fix the branch customer journey when there's such focus on the mobile and digital experience? So somebody who's sort of seeing a bit of a conundrum there.
Okay, so I'll pick up that one first, and then, Bob, maybe you can chip in. For me, it's a classic question. I've seen it all the way across the banking industry because there's so much focus on people saying they need mobile, they need digital. Actually, what they should be aiming for is Bob's omni-channel. So the branch journey should be naturally included in that mobile and that digital experience. It shouldn't be something that's completely different. If you've got your customer experience right, then there will be nuances between those journeys, but they won't be so completely different that you're having to build something completely separate, especially if you're using tools that allow you a full omni-channel experience there. The other thing to do is to look at the data and follow where the customers are. So yes, great, focus on your mobile and digital experiences. But Bob's slide about the majority of account opening interactions being in branch today suggests that it's still worth investing in that branch side of things. And like I say, look for those technologies that allow you to combine. You shouldn't be having to specifically do one or the other. You should just be having a different skin on the same process. Bob, any views on that?
Yeah, just one, and I mean, omnichannel is a word that's overused and ill-defined, and I'm probably as guilty of that as the next person. But saying to seek an omnichannel solution and figuring out exactly how to architect for it are two different things, right? And so very very consistent with what Andrew was just saying, I would offer the suggestion that. Just be sure what you do build does not require significant rework each time you want to expand it to another point of engagement. So if you do implement something of a customer experience layer that can leverage, even if you have different systems in the branch and online, you can plug into each of those individual systems without rip and replace and have the same customer experience benefits as you migrate from one to the next, regardless of your starting point.
Very good, very good. And it really, I think, it sort of bundles into the one last question that we had of those that have been submitted up to this point, which sort of follows on the one that you just responded to, and it's just the idea of avoiding being overwhelmed at the idea of this process. The one person asks, how do I start the transformation journey? It looks so complicated, and I'm concerned that we'll never get there. And I know you've provided a few suggestions for folks, but maybe if you could sort of give a bullet point for folks who find themselves in that position.
Sure. Let me have a go with that one, and Bob, you tell me which bits I've missed. For me, it's about starting small. Don't try to take on absolutely everything at once. Understand where your vision is, and as a huge transformational process, but break that up into small chunks of what you could actually achieve and try and build confidence in what you're doing as a result by doing something that's small and simple first. You need to understand as well from that how you can take something like a branch journey and port it across to those overall omni-channel versions, because that will make sure that you're building it strategically, and it will also give you a much better buy-in from your stakeholders if they see you building something once and reusing it. And the final thing for me is about genuinely, consciously accepting that transformation can be painful. It doesn't matter how hard you try, and using Quadient's world's best industry-leading tools, there is still a level of pain that you have to go through when you're breaking something apart and putting it back together again. So accept that publicly and get your stakeholders to sign up to that, because it's far better to understand it up front instead of being painfully surprised later. Bob, your views?
Well said. I wouldn't have a thing to add.
Great.
Well,
I'll tell you, I want to thank you both very much. I'm afraid that we're coming up against the clock. My apologies for cutting off a little bit there, Bob. I want to thank both Bob and Andrew for joining us today. I want to let everyone know if you have any feedback on today's webinar or any recommendations for future webinars, please complete our short survey at the end of our webinar. It should be up on your screen shortly. So once again, for Finovate, for Bob, Andrew, and the rest of our team here, thank you all for joining us. We look forward to seeing you next time. Bye.